Hi guys, so I've decided to do a short explanation regarding the fundamentals we had today for dollar index, right? So the main purpose of this short video is to illustrate how you could have traded the fundamentals that came out, I think around 2:30 or somewhere there, or 4 o'clock, I'm not sure. So let's go to the calendar and check. So if we come to investing.com and then we go to the calendar, then you're gonna see the fundamentals that I'm talking about. I'm talking about the GDP, right, which was very negative. It missed the forecast by almost 0.07%, and that's a big gap. Then we had the GDP price index, which was positive, and then we had the initial jobless claims, which were also positive. But from these three fundamentals, guys, by default, from your general perspective, you know that GDP is the strongest fundamental that's going to have the strongest effect on the currency, which in this case is dollar. Now, after seeing the GDP miss by 0.7%, you should have known already that dollar is going to be under pressure from 2:30. Now, this video is mainly for those guys that are in the mentorship group, because this is where now we are applying the calendar onto our institutional order flow. Now, once you come to your chart, right, which is dollar index, if you're in the group, you already know this chart. I have been sharing it since Tuesday or Wednesday, I'm not sure, where we had reaccumulation happening mostly during London open session, and then price was rallying to the upside, and we did benefit quite a few times so far this week from this fair value gap, which is a discount price. We had accumulation here on Monday during the Asian session, right, taking out of an old low, sell stops getting liquidated. After that, we saw a rally. This leg to the upside on Monday gave us the emphasis to hunt for reaccumulation, because price had already given us a signal. It has already showed us its intended price delivery, which was to the upside. Now, coming back to the fundamentals, GDP number missed. I even sent you guys a message in the group to say this is going to weigh in big time on dollar, meaning it was going to be bearish. Now, how then would you have traded dollar? Now, if we come to 2:30, that's where the fundamental was released. 2:30, you're on your charts, right, looking at price action and how price is reacting. You can see we had reaccumulation here 11 a.m. in our discount range, right? This is our discount range, fair value for long positions. We had Monday, Tuesday, Wednesday. Today is Thursday. Monday, we had the initial push to the upside. Tuesday, 2 o'clock, we had reaccumulation. Again, on Wednesday, we had reaccumulation. Today, again, we had reaccumulation here, 11 a.m., down into this bullish order block. And price did rally. Now, the trades you could have taken from here, right, the short positions that you could have benefited from these levels, they're quite huge. You see, it means you'd have only lost one trade if you had traded this fourth reaccumulation, of which this is a big move to the upside. Remember, 20 pips a day is enough. Most of you guys have got small equity and you're in the process of growing that equity. So 20 pips a day is fair and fine. Don't be greedy. Now, coming back to the negative fundamental that we saw for dollar index, specifically focusing at 2:30, right? So this candle here, let me go to the 15-minute time frame. So this is our 2:30 candle. Now, this candle here, this bullish candle, the 2:30 candle, it traded up until 3, right? No, this is a 15-minute candle, up until 1:45. We saw a negative number for the GDP. Now, this rally to the upside from 2:30 up until 3:15, that rally on its own, you should have already known, after all that you have learned in the mentorship, you should have already known that this move to the upside is not going to be sustained. There is going to be a huge drop. So what is that move to the upside doing? It's enticing buyers to come in. It's enticing retail minded traders to buy dollar, not knowing that the GDP number missed its target, and that's bearish for the dollar. You can even check here when you go to the calendar, right? You go to the GDP summary. Now, the calendar actually tells you further information, right? I'm just going to read this part here. A reading that is stronger than forecast is generally supportive, meaning our forecast was 2.7. We needed to get a number that is 2.8 and above, which we did not. While a weaker than forecast reading is generally negative for the USD, which is bearish. We saw a negative release, 2%. Coming to the calendar, this move to the upside, these two candles here, you'd have known already that you are looking to trade price when it reaches this bearish order block, right? Look where the reversal came in, almost close to the 50% mean threshold of this 30-minute bearish order block. Why this 30-minute bearish order block? Because you can see we had distribution here, right? This candle here traded above today's high. That's distribution, right? Let me highlight that. This move to the upside and close below, that's distribution. Price taking out buy stops. Buy stops were getting raided. And then we saw a short move to the downside. The fundamentals came out. We trade to the upside. Where did we trade to? Inside this bearish order block. Already you'd have known. You see, if you're in the mentorship, guys, you should know what I'm talking about. You'd have known already that the move to the upside that we got during London session was a buy stop raid. So market is looking to move to the downside. Short liquidity engineering. We're going back to the basics of supply and demand. 2:30, the fundamental came out negative. You'd have been shorting with your stop loss above 93.97, right? Like 10 pips above 93.97. So you'd have literally had a stop at somewhere around 94. Just an example. Now, once that happens, right? Once you had done that, negative fundamentals, the next fundamental was coming in at 4 o'clock, right? 4 o'clock, which is 1.5 hours after 2:30. That means you'd have waited, you'd have held your position up until 4 o'clock, which is right here. 4 o'clock, you'd have had a drop of 20 pips on dollar. Now, 20 pip drop on dollar would have resulted in this on USD JPY. Would have resulted in this on Euro USD. So this is the drop, 43 pips. So let's see, where is 4 o'clock? Right, up until here. So you'd have already got 51 pips
just from going long on Euro USD. Now 4 o'clock we had we had pending home sales for the month of September. And what did those home sales did? They came out negative again. You see, forecast was 0.5. Now, if you go to the pending home sales summary page, you can see here a reading that is stronger than forecast is generally supportive, which is bullish for the dollar. Did we get that? No, we missed that big time. We missed it big time. So we got minus 2.3%, and here we got 0.5. So we missed it by almost 2.8%. While a weaker than forecast is generally bearish for the dollar, we got minus 2.3. Once you had seen that, right, on dollar index, 4 o'clock, you were not going to be able to trade to close your position. What you'd have done is you trailed stop. You see, you trail stop your position because the pending home sales were negative, which would have further enhanced your shorting opportunities on dollar. And you can see after that, dollar fell for almost 43 pips after the first initial 20 pips. So that means those two fundamentals which came out negative, the GDP and the pending home sales, dollar actually dropped from here up until 6 o'clock. It dropped 65 pips. Now that would have resulted in you so we are looking at price trading into this bullish order block. That's where you'd have gone long, so roughly around that price, 96 pips on Euro USD. And if you come to pound USD would have resulted, you see the price action itself shows you where you should have been reacting, because if negative fundamentals come out for dollar, by default you're already looking for longs on pound USD. Pound USD rallied 82 pips. That's already more than 180 pips on those two assets only. USD JPY, you'd have been looking for shorts from where? Let's see, 2:30, 3 o'clock. So that's 4:12. Let me go to I'm on H1. So that's 3 o'clock. USD JPY, you'd have been shorting it from here, and it dropped 44 pips, 180 plus 44. You're already looking at about 220 pips. If you come to Aussie dollar, 3 o'clock. Where's 3 o'clock? Right there. You see Aussie dollar, what it did, it filled up this discount range here. For the liquidity void, price came into fair value, right? With a consolidation here, this expansion here on H1, this expansion on H1, from this consolidation, there's 15-minute, 30-minute bullish order blocks there. This is where you'd have gone long. You'd have got another 40 pips. That's already 260. NZD USD, sorry, same applies. You can see there, 1500 hours, you're going long, 37 pips. That's already plus 300 pips without even looking at USD CHF, which would have been what? Bearish. Without looking at USD CAD, which would have been bearish. You see, so that's how you'd have traded those fundamentals, the negative fundamentals that came out for dollar. So now remember, the mentorship group, we are at that phase where we are applying the calendar to our technical chart. We are applying the calendar to our order flow analysis. You see, if those fundamentals were positive, we should have seen dollar rally, but no, they were not positive. Your mindset already should have switched on to shorting dollar, getting a weaker dollar. So yeah, this is what you should have done today, trading what? The dollar index, and conversely how you'd have applied that on Euro USD, Pound USD, and the other major currencies. So yeah, that's pretty much what I wanted to elaborate further on. Yeah, we were supposed to have this as a Zoom session, but because of load shedding, I just decided, no, let me record so that those who missed the session, they will have a proper
recording to go through. So yeah, if you're not in the mentorship, guys, some of the things I would have mentioned might not make sense. You are welcome to join the mentorship. Just make sure you send us a message and we can take it from there. So yeah, that's pretty much what I wanted to share with you guys, and I hope some of the questions you had have been answered. So tomorrow, which is Friday the 29th, we should be focusing on GDP for Germany, and this is gonna have a huge impact on euro. And then we also have CPI for euro, the inflation news for euro. So these fundamentals, 10 a.m., 11 a.m., expect the euro to be trending big time. Any sign of negative release from these fundamentals, then we should see euro USD finding a bit of resistance around this price point here, $1.16, $1.17. We should see euro USD finding a bit of resistance. So take note of those fundamentals. The rest of the day, we've got GDP for Canada, and what else that's important that we've got? Nothing much for the rest of the day. So these two fundamentals here for the euro and for the CAD, they are definitely going to move the markets tomorrow. So yeah, that's pretty much about it, folks. I wish you guys good luck and happy trading. Thank you.